Assalamualaikum warahmatullahi wabarakatuh. So today, we will present to you about the inventory and warehousing cycle. For the introduction, the inventory cycle is unique because of its close relationship to other transaction cycles. For a manufacturing company, raw materials enter the inventory and warehousing cycle from the acquisition and payment cycle. Meanwhile, direct labors enter it from the payroll and personnel cycle. The inventory cycles end with the sale of goods in the sales and collection cycles. Next, we go to the flow of the inventory cycle. Firstly, it will receive the raw material, and secondly, they place the raw material in the storage or warehouse. Thirdly, they transfer the raw material for production. Fourth, they arrange the finished good in storage, and lastly, the finished good are ready to be shipped. The transaction that we have choose is inventory and warehousing cycle, account payable, and purchases. And the assertion related to them is existence, completeness, accuracy, classification, cut-off or timing. The class of transaction and relevant account for inventory and warehousing cycle is account payable, cost of goods sold, account receivable, inventory bookkeeping, sales return, and inventory cash account.
Next, we go to the first assertion in inventory, which is existent. The audit objective is to check whether the inventory record on tag exists. Next, we go internal control. Firstly, segregate and restrict access to storage area for raw material, work in progress, and finished good. Assign custody of inventory to specified individuals who are responsible for protecting the inventory. Installation of security measure and disbursement are authorized before issuance. Next, we must do a test of control. Firstly, we must have examined the transfer of inventory from one location to another and do examine the pre-number document for authorizing record movement of inventory and do observing the physical inventory count. For substantive test, check the description and date of all record transfer, compare the tag number with the number attached to the actual inventory and check whether the inventory is actually exists. After that, we will got audit evidence, which is physical inventory, human resource record, traditional assistant document record, inventory journal, and inventory transaction file. There are still have possible misstatement and overstate amount inventory account and overstate current asset.
Next is completeness. The management assertion state that existing inventory is completely recorded and tagged. For the audit objective, it is to check whether existing inventory is completely recorded and tagged. For the internal control, the transfer of inventory are approved by supervisor and this process is called authorization. And for the documentation, the inventory checks are pre-numbered and accounted for, and inventory label with standardized barcode or tag to ensure the consistency of data. The audit procedure for test of control is firstly, examine the transfer of inventory from one location to another. Secondly, examine all actual transfer are recorded. Thirdly, examine inventory to make sure it is tagged. And lastly, examine the record of tag numbers for those used and unused. For substantive tests, compare the completed production record with the perpetual inventory master file. Secondly, inquire as to inventory to other location. And thirdly, account for all used and unused tags. The audit evidence are inventory journal, inventory transaction file, and perpetual inventory master file. The possible misstatement that will occur is misstatement and understated amount of transaction in inventory journal.
Next is accuracy. The audit objective of accuracy is to check whether inventory is counted and recorded accurately. For internal control, firstly, calculation and amounts are internally verified. Secondly, totals of inventory are compared with computer summary reports. And then, employees record their information in timely manner. Next, monitoring the physical count of inventory. The audit procedure for test of controls. First, we need to examine the documents and records. Second, we need to examine the requisition for proper approval. Thirdly, we need to examine the documentation that supports the addition and reductions of inventory amounts in the master files. And lastly, we need to examine the quantity of inventory. For substantive tests, we need to recount for a subsequence of raw material requisition, and then we need to compare the quantity description date with the information recorded in the raw material perpetual inventory master files. And lastly, we need to recount clients count. The audit evidence needed is inventory journal, inventory transaction files, perpetual inventory master files, and the possible misstatement that might occur is misstatement and overstate amount of inventory in the balance sheet.
Next assertion is classification. The audit objective is to check whether the inventory is classified correctly on the tag. Next, we go to the internal control. First, do adequate control over count sheet or tag. Inspect all physical area where inventory is warehoused to make sure that all inventory have been counted and proper tag. And material requisition and production data used to classify inventory into raw material, work in progress, and finished good. After that, we must do test of control. Firstly, we must examine inventory description on the tag and compare with the actual inventory for raw material, work in process, and finished good. Evaluate whether the percent of completion record on the tag for work in process is reasonable and account for a sequence of inventory tag and place each tag to the physical inventory to make sure it is actually exists. Next is we do substantive test. First, we must check that classification of inventory is in compliance with accounting standard and company accounting policy. Evaluate whether the percentage of completion record on the tag for work in process is reasonable and check inventory description on the tag and compare with the actual inventory for raw material, work in process and finished good. After that, we got audit evidence, which is inventory journal, inventory taxation file, perpetual inventory master file, and supplier invoice. There are still have possible misstatement, which is misstatement in inventory record and inventory are wrongly classified.
The last assertion is cut off or timing. The audit objective is to check whether information is obtained to make sure sale and inventory purchases are recorded in the proper period. Next, internal control. First, documentation. Purchases and sale of inventory are pre-numbered and accounted. Second is inventory purchases and sale are recorded correctly according to the time any activities happen, also called as documentation. Third is documentation and monitoring. All receiving report and delivery notes should be processed daily. Next, audit procedure for test of control. Firstly, check dates of receiving report and delivery notes to the dates to record the inventory movement in the perpetual inventory record. Secondly, make sure the inventory for above item was excluded from the physical count. Thirdly, make sure the inventory for the above item was included in the physical count. Fourthly, record in the audit file for subsequent follow-up the last receiving report number used at the year-end for substantive tests. Firstly, record in the working paper for subsequent follow-up the last shipping document number used at the year-end. Secondly, select a sample of goods received note from immediately prior to the year-end and include in the year-end payable and ensure that the goods are included in the year-end inventory. Thirdly, select a sample of good delivery notes from immediately prior to the year-end and include in the year-end receivable and ensure that the goods are not included in the year-end inventories and that the invoice was raised in the correct period. Fourthly, during the inventory counting, the auditor also consider cut-off procedure, including details of the movement of inventory just prior to, during, and after the count, so that the movement can be checked at a later date. The audit evidence is physical inventory, human resources records, perpetual inventory master file, and supplier invoice. For possible misstatement that will occur is overstatement and understate amounts of unit costs.
Class of transaction and relevant account for account payable is account payable, purchase discount, purchase return, inventory bookkeeping, and cash or bank account.
We will go to the first assertion related to account payable, which is existent. The audit objective is to check whether the supplier invoice on inventory exists. Next, we will go to the internal control. The individual who authorized the payment should not be the same person dealing with the invoice. Before sending the purchase order inventory to a supplier, the individual must get approval from a manager or other designated staff member for authorized the transaction and maintain the inventory record that reflect all movement of inventory such as inventory and purchase return. Next, we must do a test of control. Firstly, examine the document of supplier invoice from purchasing the inventory. Examine the invoice with the corresponding record purchase of inventory and do observing the physical inventory. Next, we do a subsidy test. First, check the description and date of all record in document. Compare the information of supplier invoice match with the number purchase order from actual inventory. And also, check whether the amount of account payable related to the inventory and physical inventory from the order is actually exists. After that, we will got audit evidence, which is physical inventory, human resource record, physical examination, inventory journal, inventory taxation file, and confirmation from supplier. There are still possible misstatement and overstate amount inventory accounts, and misstatement current asset and liabilities.
For the completeness, the management assertion state that new inventory from the supplier invoice is completely recorded, and for the audit objective, it is to check whether the new inventory from the supplier invoice is completely recorded. For the internal control, the purchasing of inventory in credit are approved by supervisor, and this process is called authorization. And for the documentation, the inventory checks are pre-numbered and accounted for, and quantity of buying inventory in credit should be completely recorded to ensure all relevant documents and data are properly filed and consistency. For the next, we go to the audit procedure for test of control. Firstly, examine all approval process for invoices to ensure that buying inventory in credit is completely approved by authorized. And secondly, examine inventory to make sure it is recorded. For the substantive test, it is to check there are no unapproved purchase of inventory or making liability, and to check whether the inventory is completely recorded and no missing documents. The audit evidence needed are inventory journal, supplier statement, invoice, and perpetual inventory master file. Possible misstatement that will occur are misstatement and understated amount of transaction in inventory journal, understatement of liabilities, and incomplete recording of purchase inventory in credit.
Next is accuracy for account payable. The audit objective of accuracy is to check whether quantity of buying new inventory in terms of credit is counted and recorded accurately. For internal controls, first, calculation and amounts are internally verified. Next, total amount of inventory are compared with computer summary reports. And then employees record the information accurately in date of the inventory was purchased and need to pay in the future. Lastly, monitoring the movement of inventory. The audit procedure for test of controls. First, we need to examine the documents and Secondly, we need to examine the amount and position of inventory. Thirdly, examine the quantity of inventory. For substantive tests, we need to recount for an imposition of inventory which is by in terms of credit. Secondly, we need to compare the quantity description date with the information recorded in the raw material perpetual inventory master files. And lastly, we need to recount client's count. The audit evidence needed is inventory journal, inventory transaction files, perpetual inventory master files. The possible misstatement that might occur is misstatement and overstate amount of inventory in the balance sheet. Next, misstatement in count of new inventory that are already paid and still in debt with suppliers.
Next, we go to the classification. The management assert that inventory that are obligation is classified correctly. And for the audit objective, it is to check whether inventory that are in obligation is classified correctly. For the internal control, they provide the training to employees on how to correctly classify inventory item, and this process is called training. And for the monitoring, they inspect all new inventory that include detail of description and correct amount. And lastly, for authorization, they make approval from authorized person for classification of inventory before record in account payable. For audit procedure of test of control is examine document on inventory, how purchase order and supplier invoice are classified. Secondly, select sample related to new inventory and check whether it have classified correct. For substantive test, check that classification of inventory is in compliance with accounting standard and company accounting policy. Secondly, trace the transaction back from purchase order and invoice to ensure that the entities have correctly classified as inventory and obligation related to inventory. Audit evidence needed are inventory journal, inventory transaction file, supplier invoice, and perpetual inventory master file. The possible misstatement are misstatement in inventory records and inventories are wrongly classified.
The last assertion is cut off or timing. The audit objective is to check whether information is obtained to make sure all inventory purchases and related account payable transactions are recorded in the proper period. Next, internal control. Firstly, documentation. Purchases and sale of inventory are pre-numbered and accounted. Secondly, documentation. Inventory purchases and related account payable transactions are recorded correctly according to the time any activities happen. And thirdly is inspect all purchase orders and match with information in supplier invoice to ensure all inventory are received in the proper period, called as documentation or monitoring. Audit procedure. For test of control, first examine the purchase invoice of inventory. Second, check the purchase transaction and compare with the entity record. Third, trace the transaction between inventory and account payable to match the date received in proper period. For substantive test, first, check whether purchase invoice is recorded correctly in proper period. Second, selecting sample of inventory item that had obligation to ensure that recorded are correct in current period. Third, check whether the date entry in inventory and account payable are same in the proper period. For audit evidence is inventory journal, inventory transaction files, perpetual inventory master files, and supplier invoice. For possible misstatement, first is overstatement and understates amounts of unit cost. Second is failing to record inventory and its obligation in the current period. And the last one is understatement of current assets and liabilities.
Next, class of transaction and relevant account for purchase are account payable, cost of goods sold, purchase discount, inventory account, supplier invoice, and receiving reports.
We will go to the first assertion relating to the transaction of purchase which is existent. The audit objective is to check whether the record inventory and related purchase transaction actually exists. Next, we will go to the internal control. Firstly, separate responsibility among personnel involving in ordering, receiving and recording inventory, require management approval for purchase order and inventory adjustment, and implement a three-way matching process where the purchase order, receiving report and supplier invoice are compared before the processing payment. Next, we must do a test of control. Firstly, examine a sample of purchase requisition to ensure they are properly authorized by authorized personnel according to the documented procedure. Review purchase order, receiving report, and supplier invoice for proper authorization and matching. And also observe the inventory counting process to ensure it is conducted according to the company policy. Next, we do a substantive test, which is attempt the physical inventory count to observe the counting process and perform independent test counts. Trace a sample of inventory transaction from purchase order to receiving report to supplier invoice to accounting records, and do inspect a sample of inventory item to verify their physical existence and condition. After that, we got audit evidence, which is physical inventory, human resource record, purchase order, receiving report, and supplier invoice. There are still possible misstatement, which is misstatement and overstate amount inventory accounts, overstate current asset, and non-existence of recording inventory.
For completeness, the management assert that ensuring that all inventory-related transactions are recorded in the company's accounting records. And for the audit objective, it is to check whether all inventory purchases and related transactions are completely recorded. The internal control are authorization. The purchasing of inventory are approved by supervisor. Next is documentation. Inventory checks are pre-numbered and accounted for. And lastly, segregation of duties. Assign different responsibility for initiating purchase, authorizing purchase, receiving inventory, and recording transaction to different individual or department. Audit procedure for test of control are: review documented policies and procedures related to purchase, requisition, and authorization. Second, examine the control over the purchase order process, including authorization and documentation requirement. And thirdly, assess procedures for receiving and inspecting inventory upon delivery. For substantive tests, compare inventory purchases from the current period to prior period and industry benchmark. Second, reconcile recorded purchase order with receiving report to ensure completeness of recorded inventory receipts. Lastly, physically observe inventory and participate in inventory counting procedures. The audit evidence needed are human resources record, purchase order, receiving reports, and supplier invoices. Lastly, the possible misstatement that will occur is misstatement and understated amounts or transaction in inventory purchases, and failure to record inventory receipts.
Next is accuracy for purchases. The audit objective of accuracy is to check whether all inventory purchases and related transactions are accurately recorded. For internal controls, firstly double-check the inventory records against purchase order and supplier invoices to make sure they match. Next, regularly check that inventory processes that working well. And then employees keep good records of all inventory transactions like purchase orders and invoices. The audit procedure for test of controls. First, we need to examine documented policies and procedures related to purchase requisition and authorization. Secondly, we need to review controls over the purchase order process, including authorization and documentation requirements. Thirdly, we need to examine the quantity of inventory. For substantive tests, firstly, we need to compare recorded purchases order with receiving reports to verify the accuracy of recorded inventory receipts. Secondly, we need to compare current inventory balances to prior periods and industry benchmarks. Thirdly, we need to physically observe inventory and participate in inventory counts. The audit evidence needed is physical inventory, human resources records, purchase order, receiving reports, and supplier invoice. Possible misstatement that might occur is misstatement and overstate amount of inventory in the balance sheet, misstated inventory valuation and cost of goods sold, affecting gross profit and net income. Next is classification for purchases. The audit objective of classification is to check whether inventory purchases are categorized and classified correctly. For internal controls, firstly, establish clear policies and procedures for documenting and approving inventory purchases. Next, implement segregation of duties so that different individuals are responsible for initiating purchases, authorizing transactions, and recording accounting entries. And then, maintain a well-structured chart of accounts that includes specific accounts for different types of inventory. The audit procedure for test of controls. First, we need to review the accounting systems control to ensure that transactions are automatically classified into the correct accounts. Secondly, we need to verify that purchase orders and inventory classifications decisions are reviewed and approved by authorized personnel. For substantive tests, firstly, we need to select a sample of inventory purchase transactions and verify that the classification by tracing each transaction from purchase order to recording in the accounting system. Secondly, perform analytical procedures to compare the classification of inventory purchases across periods and against industry benchmark. The audit evidence needed is physical inventory, purchase order, inventory journal, and inventory transaction file. Possible misstatement that might occur is misstatement in inventory records, misclassification of inventory types.
And the last assertion is cut-off or timing. The audit objective to check whether all inventory purchases are recorded in the correct accounting period. Next, internal control. Ensure that receiving report are dates accurately and that these dates are used to record inventory purchases, called as verification. Next is separate the responsibilities for recording purchases, receiving inventory, and approving payments to reduce the risk of error or intentional misstatement, called as segregation of duties. The last one is implement specific procedure at period end to ensure that all purchases are recorded in the correct period, such as a cut-off checklist, named as periodic cut-off. Procedure for test of control. First, examine the company's procedures for ensure proper cut-off of inventory purchases at period end. Second, examination of receiving reports and supplier invoice around the period end date to ensure that are dated accurately and recorded promptly. Third is observe the physical inventory count process at period end to ensure that inventory received near the period end is included in the correct period. And the last one is assess whether responsibilities for receiving inventory, recording purchases, and processing payment are appropriately segregated. For substantive tests, first, select a sample of inventory purchase transaction near the period end and trace them to receiving report and invoice to verify the recording date. Second is examine payments made after the period end to determine if they relate to purchases made before the period end. The third one is review receiving report for a few days before and after the period end to verify that inventory receipts are recorded based on actual receipt date and in the appropriate period. The audit evidence was physical inventory, purchase order, receiving reports, and supplier invoice. And the last one, possible misstatement. Overstatement and understate amount of unit cost. Failing to match inventory purchases with the corresponding liabilities in the correct period. And the last one is incorrectly recording the date of receipt of inventory, leading to misclassification between periods. That's all from us. Thank you.